for today, I made an overview. It's about a guide to set up your own company. If you will set up your own company, please feel free to ask questions at the end. And I'm also curious to hear from you if any of you already maybe has set up his own company. So first, I will start with a brief introduction, and then the next step will be to discuss the target audience, which is a very important factor to determine what type of company you're going to set up. Then we will discuss the different and most common business types. That's followed by how to create a business plan, and then how you can fund your business. And we will end the college with a conclusion and time for questions and answers for today. So, well, first of all, again, welcome to all of you. My name is Lynette Davidson. I'm a Dutch lawyer, and I'm excited to share today my knowledge with you, and also to help you understand the difference in a legal entities, to help you determine what type of company you may be willing to set up, and also how you can impact the success of your own venture. Starting up a company it requires careful planning and also different considerations. And it's crucial for you to understand the different business types and how they can affect your operations as well. And also, it's very important for you to have a better understanding of the financial responsibilities. By the end of today's presentation, I hope you have a better understanding of the different business types there are. And I hope you are better equipped to make an informed decision about your company structure and the direction you want to head to. Antonella, can you maybe move 2 slides ahead? As we will now discuss the target audience. Step number 1, if you're going to think about setting up your own company, the first step you should be thinking of is there any target audience? Because if there's not a target audience available for the product or service you would like to sell to any customer, you are less likely to succeed. So in order to set up, it's essential to have a comprehensive understanding of the individuals who will make up your target audience, who will buy your product, who will buy your service. And you can analyze this by doing market research to examine the patterns or the trends of today. For example, last time we discussed e-commerce companies, mainly because of the digitalization, much more products and services are now sold online. If you can find any product or service which has a greater target audience to reach, you are more likely to have financial success. And also you can develop products or services that are tailored to the needs of specific clients. You can either make a product available to a broad target audience, or perhaps you would like to more specify on a specific target audience, for example, elderly people who need help. To formulate research strategy, the first step is to clearly outline and define who is your target audience. And it is vital to take into account various demographic factors, such as the age, the gender, what is their income level, but also geographic location. For example, where is the target audience located? Are they located in Europe? What type of jurisdiction are they located in? What is the interest of your target audience? By analyzing these different factors, you can help determine who your target audience is, which will allow you to tailor your approach and to reach and engage your target audience. It's not only important to analyze and examine who your target audience is, but another very important factor is to also think of who is the competitor. For example, if I want to create a Coca-Cola product, I know my competitors are already so highly skilled and they have a very big specific expertise. I might be overwhelming myself. So it's very important to first determine your target audience, but it's also very important to determine who is your competitor. For example, if there are very few competitors, you are more likely to succeed. You can also learn from the competition. You can also determine what helped them may grow. So it's very important to look into the interest, the patterns, and the trends, but also who is your competition if you are thinking about setting up any company. The next topic we're going to discuss for today are the different business types. There are several business types to choose from when you want to start your own company. And the most common business types are the sole proprietorship. The second is a partnership. The third one is a limited liability company. And the fourth one is a corporation. Of course, there may be different business types available in different countries, and each type has its own unique advantages, but these ones are the most common ones. The first one we are going to discuss for today is the sole proprietorship. This is the most common and most simple type of company. It is operated and owned by only one person. This means there is no legal distinction between the owner and the business, which is a very important factor because this leads to direct control and direct management of the company. Later on during this presentation, we can see there are different legal entities available, and some entities allowed to have a different control and different management between the owner and the management of the company. The sole proprietorship is very easy to set up. It's not complicated and it's very cost effective because it requires minimal operational expenses. It's only required to have one person to start and operate the business. However, it is critical to note, especially if you have zero experience, the owner bears full liability. This means you are personally responsible for all the business debts and any legal challenges that the company may emerge. The owner reaps all profits and bears the brunt of all losses, debts, and liabilities of the business. Consequently, all the profits are subject to personal income tax. Unlike corporations or a limited liability company, there is no mandate to formally register a sole proprietorship with the state, which makes it an accessible option for many. This is also why this type of company is the most common one and the most simple one chosen so far. The advantages of a sole proprietorship we just discussed are thus it's very easy to set up, but it's also very easy to dissolve, basically. It's very flexible because if it's only one person owning and managing the company, there is no other partner you need to discuss with at certain points or topics. This makes it a very attractive option for many people, especially for freelancers, consultants, and small businesses. While there is no obligation to operate under a separate business or trade name, sole proprietors, they often conduct business under a trade name, which means they are doing business as or DBA. Can you also think of maybe other professions who would choose a sole proprietorship in different industry? Or maybe you have your own sole proprietorship. Can you raise your hand, please, if you have any idea what type of profession would be interested in such a type of business structure? I am not sure if I can see the chat right now because I don't see any comments, or maybe that is saved for the end. Well, I will continue in that case. It's very common for an independent. Oh, you can hear me? Now I can see your opinions. Do you have any idea, guys or girls, maybe what type of profession would pick a proprietorship? Especially an independent contractor would be interested in this type of structure, or a consultant, or a small shop owner like a bakery. So yeah, but also for example, a graphic designer or a freelance writer or a personal fitness trainer could also choose the sole proprietorship because it's very flexible and easy to set up. There are also different challenges for a sole proprietorship. The first one, if you are going to set and run the business completely by yourself, it means that everything is on you. As a sole proprietor, there is no line between your business, finance, and your personal money. This means that if your business goes into debt or when it gets sued, your personal savings and assets, even your house or your car, could be used to cover those debts. Even mistakes or accidents caused by your employees can land on your shoulders, putting your personal assets at risk. The second challenge you have is that not everyone will take you seriously. Sometimes other companies or government offices, they don't see a sole proprietor as a real business. They might worry about tax issues, or they think you might not be as professional as a bigger established company. This can make it hard to get certain jobs or contracts. I can see there's a question in the chat. When you say partnership, does that mean if you're always associated with somebody else? Yes, a partnership means there is always two or more individuals included. The partnership will be the next topic we will be discussing for today. So we will get there in a bit, but it means exactly two or more individuals involved. The second challenge for a sole proprietorship is, well, actually the third one is that getting money may be tough as well. This means because if you want to grow or scale your business, you may hit a wall. You cannot sell shares in your business if you have a sole proprietorship, like a corporation can, for example. So an investor might not be interested to invest in your company because you cannot give him shares. And even a bank can be worried because they are worried you won't be able to pay back the loan if your business doesn't do well. The fourth one is that selling your business might not be easy. If you ever want to sell your business because, for example, you reach the age of retirement, you may find it tricky because you and your business are basically seen as the same entity. And figuring out the business value can be complicated for that reason because there is no separate layer in between. Plus, if anything will happen to you, like getting seriously sick or passing away, or if you just want to sell for any reason, the business value might be difficult to determine because a lot of the business success might be tied up in your own personal reputation and your own relationships, and those cannot be transferred to a new owner. So while starting a sole proprietorship is very easy, it does come with significant downsides, especially when it comes to personal risk, future funding, and the third one is selling the business. A partnership is a collaborative business structure established by two or more individuals who agree to jointly own and operate a business. Unlike a sole proprietorship, a partnership allows to have a shared ownership, which results in combined resources and talents and skills, potentially leading to an increased business efficiency and profitability. A sole proprietorship compared to a partnership is the biggest difference is that a sole proprietorship always has one sole owner, whereas a partnership is two or more people agreeing to operate a business for profit and for forming a legal entity. What do you think could be an advantage of setting up a partnership? Does anybody have any idea? I don't see an answer yet. When would you like to be more willing to set up a partnership? Do you have any idea? in what scenario it could be more interesting to set up a partnership in comparison to a sole proprietorship. The first one we just discussed, it's to onboard more knowledge and more skills, because if I set up a company with 2 or 3 individuals, we can all include our knowledge and our expertise in a company. So if I would like to create a team of professionals, for example, it's more interesting to set up a partnership. I will discuss with you examples of different partnerships so you have a better understanding. Partnerships are very common in different industries, and they can range from very small enterprises to very large professional firms. So you can think of, for example, a law firm, because exactly you can benefit from the expertise on a partnership. For example, if I am focused on contract law and somebody else is more experienced in a different topic, for example, investments or maybe tax regulations, I can onboard the other individuals as a partner. We can all share the profits and the liabilities, and we can have a decision-making process together. Another example is an accounting firm. So similar to a law firm, accounting firms, they often run as a partnership, and they have a shared ownership amongst the different accountants. Another partnership you can see quite often in practice is a medical practice. Doctors in private practices, they might form a partnership to share responsibilities, but also to share the resources and the liabilities. Another example is a real estate company. Different real estate companies, they involve different partners, especially because they involve several investors. So for them, it's usually more interesting to set up a partnership. Another example could be a creative business, for example, with different type of designers. If they want to create an entity, for example, an advertising agency or a design studio or even a film production, they might be structured as a partnership to pool creative talent and their different resources. Another example could be a consultancy firm. Experts in certain fields, they might band together to start a consulting firm to leverage their combined expertise and their network so they can reach a bigger target audience. So in each case, a partnership model allows the partnership to share the expertise, but also the risk and resources, and they can potentially provide a stronger foundation that way than a sole proprietorship may offer. However, the success of a partnership, it's very important to realize, heavily depends on clear communication, a strong legal agreement between the different partners, especially in case of a dispute, and a good working relationship between the parties. If there will be any disputes between the partners, or any partner will make a decision for which the 2 other partners are also held accountable, this can lead to a very big problem internally. So it's very important, if you're thinking about setting up a partnership, to always have something in writing, like a legal agreement to how to react to any dispute or any problem. How will the decision-making process be determined? And to always invest in a good working relationship between the partners, because you never know when the communication will get in trouble with a partnership. Even though if you have been working together for 10 years, it doesn't mean the partnership will still succeed in the end. The third type of entity we will discuss for today is the limited liability company. A limited liability company is a business structure that blends the best of both worlds. It actually is, well, the name already includes it. It has a limited liability protection layer, which means you are less liable and you have the tax benefits of a partnership. So essentially, an LLC offers the personal liability protection of a corporation because it shields the owners from personal liability for any debts incurred by the company. But at the same time, it's as flexible as a partnership. because it allows the owners to manage the business and share profits and losses as they see it. When it comes to taxes, however, an LLC is considered a pass-through entity. This means that any profits or losses generated by the limited liability company will be reflected on the personal tax returns of the individual owners. In other words, the LLC itself is not taxed at the corporate level. A corporation is a legal entity that is formed by individuals or groups of people. Usually a corporation is for the bigger type of companies when they choose to form a corporation, because it's less flexible and it allows you to grow more as well on the long term. It is usually created for the purpose of conducting business activities such as buying and selling goods and services on a bigger scale. A corporation is also known as a company or a firm, and it is commonly characterized by its separate legal entity status, as it is established as a separate entity from its owners. This clearly demarcates personal liability from business liability. So that is the biggest difference between a corporation. A corporation can also hold its own property. So for example, you can buy your own assets when you have a corporation. You can also enter into a contract through a corporation, but the corporation can also be sued, and you can also sue from the corporation. A corporation also has more rules they must follow. So for example, a corporation must hold an annual shareholder meeting to make sure the owners of the corporation understand how the business is going. Another example of a corporation is that there is a board of directors, and the management may also be different. So for example, the founder in the end may be less involved compared to the management layer. Although there are many benefits to setting up a corporation, the process is slightly more complex and entails increased costs of operation. This means that if you want to run a business only by yourself and it's going to be a small entity, you wouldn't be likely to form a corporation because it's not very flexible. It's more difficult to dissolve and set up compared to a sole proprietorship, and it needs more capital as well. I would like to ask you a few questions to check if you have any idea what would be the best structure for any potential clients. The first one we will discuss for today is Alexa. She's from Paris, and her idea is to organize parties for children. She will be working only by herself. She will create an Instagram page. She will work part-time next to her study. She's only 18 years old, and she's thinking of setting up a business structure for her clients. She knows she has a big target audience. Do you have an idea what business structure would be best for Alexis? What would you recommend her? And can you also explain me, please, why? I see one answer in the chat. It's a sole proprietorship. That's correct. Can you maybe explain me why you choose for this business structure? I'm curious to hear your thoughts. Because she will be working alone. Yes, that is correct. And also another reason could be because there is no capital needed. She doesn't need to invest in capital. She doesn't need to attract any investor because she knows she already has a target audience available. Another reason could be because it's very easy to set up such an entity, and it's very easy to quit whenever she wants, because like I mentioned, she will do this part-time next to her study. So that's correct. Number two, Peter from the States, he would like to sell car parts on a global level. What type of entity do you think could be best for Peter? What would you recommend him to set up? And can you also explain why you would choose for the business structure for Peter? We discussed today a sole proprietorship, a partnership, an LLC, or a corporation. What do you think could be best for Peter? An LLC, yeah, that could be an answer. There could be actually more than one answer correct. A partnership could be an idea, although I wouldn't recommend a partnership in this case. Why? Because Peter will be selling car parts on a global level. That means that he has a risk, or the business has a risk. If he would determine to set up a partnership, that will make him liable for the failure of the business, because there is no limited liability. A car part can fail, which means he will be held personally liable for any debts of the company. So that's the reason why a corporation or LLC could be more interesting. Since it's a cross-border level, more countries could be involved. And if he will scale the business, he would be maybe interested in attracting investors at some point. And also he could maybe work together with other individuals. Maybe he needs somebody to do administration, or maybe he needs a manufacturer involved, or any other expertise. So that's why an LLC or a corporation would be a better idea for Peter, because that way he is more protected for the risk he is carrying when he is selling car parts. The third one is Omar, and Omar is from Kenya. Omar just graduated the law school, and he wants to work with a team of legal professionals. He doesn't really have any capital to start off with. However, he mentioned to you today he has 2 friends who he can work with. What type of business structure do you think could be interesting for Omar to set up and create? And can you also explain me why? So he just graduated from law school, and he wants to work with a team of legal professionals. He doesn't have capital to invest, and he has 2 friends who he already spoke with who can join him. The best structure for Omar from Kenya, thank you for answering, is indeed a partnership. Can you also explain me why you chose for a partnership for Omar? Why could it be interesting for Omar to create a partnership and not, for example, a corporation? I will give you a hint. Omar doesn't really have any capital to invest, and he already has 2 friends that can join him, which means he doesn't need to look for an investor, because he has 2 friends who already have the knowledge and the resources exactly to join him. So he can set up the entity with his 2 friends, and they can work together and combine their knowledge and their skills for the business. And also they want to share the liability, they want to share the profits, and they don't want to make it too complicated. They don't want to sell shares to other investors. They want to work with 3 people in total as a legal team. And he just graduated from law school. So a partnership in his case would be the best idea. I hope the examples clarify a bit the different types of business structure you have, and how you can think what's the best fit for your own interests. If you would like to create a business, it is very important to not only think about the business structure, it's also important to think of the target audience, to check if there is any audience interested in the product or service you want to be selling. But you also need a business plan. A business plan is like a roadmap for your company, and it outlines your goals, your strategies, and tactics for achieving success. Without any solid plan in place, it is easy to get lost or sidetracked along the way. That is why creating a business plan is very important in any type of business you want to create. When you want to create a business plan, there are several key components that should be included. These include an executive summary, market analysis, sales and marketing strategy, along with financial projections and management team. Each of these sections, they play a crucial role in helping you build a successful business. Why is it so important for you to have any plan? Because if you are going to set up a company, or especially in the first year or first 2 or 3 years, you don't really know, or you may not know the direction you're heading to. Without any plan, you may have overseen different factors, and it's very easy to lose direction. Another advantage of a business plan is to keep track. You can always look back at the original business plan and check if there was anything deviating from the business plan. For example, maybe you created a solution for your customer and the customer wasn't really interested. As you will start and scale your business, you will also receive feedback. And it's very important to check if the business plan combined with the feedback you are receiving for your business, if it's still going into the right direction. So it's very important to do your research and gather as much information as possible, but also look at successful business plans from other companies in your industry and take note of what works and what doesn't work. Especially what doesn't work could be maybe even more important than what does work, because you can learn from the mistakes other people or other professionals made. You can use the information to craft a plan that is unique to your company and that showcases your strengths. If you want to set up a company, it is very important to also be unique. So you can either be more unique by focusing on a specific niche for the products or service, but you can also make the company more unique in the way, for example, you are reaching out to your clients. I can see there's one comment in the chat: the best business structure for Peter, who wants to sell car parts globally from the United States while minimizing risk, would be an LLC. Well, LLC or corporation could be both correct in this case, because both type of entities, they will create a separate layer between the entity and the person behind the business. So both options could be correct in the case of Peter. If you have more questions, please reach out through the chat and I will answer them meanwhile. And I will now continue with the business plan. To explain a bit more about the business plan, because it might sound a bit solid to you right now. There are different type of factors you want to include in a business plan. Oh, and I can see that the audio is out for Dominique. I think it should be on. If there are more people experiencing this problem, please let me know. The first thing you need to include in a business plan is an executive summary. This means a brief overview of your business and its goals. The second is a company description. This means detailed information about the business, including its structure, who is going to be the management team, and what products or services are you going to sell. So step number 1 and step number 2 actually mean, what does the company do? What is the mission of your company? Do you have a company name? Because if the company name is already taken, you cannot register the name, of course. It's very important to be as specific as possible, Because if it will be very broad, you will lose track and the company might go into any direction in the end. So a brief overview of the business and its goals, what you want to achieve in the first year or even first 6 months, and then followed by another 6 months, could be very important to help you grow. Also, it's very important to decide upfront who will be the management team, who will be allowed to make any decision. For example, if it's going to be a partnership, does everybody decide on the same topics, or how will the decision making process will go? What will happen in the event if anybody will be sick or somebody wants to quit? It's important to think of all these topics upfront. So ask yourself all these questions while creating the business plan so you can make it more detailed along the way. The third one you must do when you create a business plan is to conduct market analysis, because a thorough assessment of the market to target your customers and your competition will give you a more clear overview of the market. Is there any interest in the type of company you are thinking about creating? Because if there is no target audience, yeah, your business is very unlikely to succeed. So it's very important. I cannot repeat this enough, I think, for today. The target audience is very important, and the target audience also may change along the way. For example, maybe people are now very interested in a new digital device, whereas in 2 years, a new device already came up, which will be owned by your competitor. So you need to focus on a new target audience. So always review the market along the way as well, because if there's no target audience, you will not be financially succeeding, basically. The fifth one is a product or service line. This means you will describe the products or the services you're going to offer and how they will meet the customer needs. So to make it more simple, what problem is your company going to solve for the customer? What results will your company create? And why should the customer choose you instead of the competitor? Especially the third one, if you already do have competition, it's very important if you can deviate yourself from the competitor to make you more interesting. Like, why would the competitor be less likely to succeed? Because you can offer a different service, or maybe your product is better, or maybe you can do it faster. What makes you different from the competition, and why should the customer pick you instead of the competition? So it's very important to describe as specific as you can what problem you can solve or your company, and what results does your company create. The sixth one is the financial projection. This will demonstrate a forecast of the business financial performance, including revenue, expenses, and profits. Here you can think of, because it's a forecast, because you don't really know how things may go in reality, you can still maybe already assess and examine, for example, for a similar product like sunscreen, what is their revenue on a monthly basis? What are the expenses per month or per 6 months? What are the profits? It's very important to have any forecasts for yourself, but also for the business to be more able to succeed. Because if you know the revenue and you have an idea of the expenses per year, maybe you need specific permits or licenses because you need a medical license to sell their products. If you have any forecast about the business financial performance, you can help and grow the business accordingly. Maybe you can cut on expenses, or maybe focus on a similar product that doesn't require a permit. And also here, it is very important to think again of the target audience and think of the psychographic and demographic factors, like the age of the target audience, their interests, the location, and also the income. For example, if I want to create a business which will be selling sunscreen, it could be more interesting for me to focus on locations where people are more outside, for example, Australia or maybe California or maybe Key West. It's very important to think of where your target audience is located, and you can run and sell the product or service accordingly. Because if the target audience has a higher income, that means you can also maybe earn more income as a company when you focus on the different factors for the target audience. Another factor you want to think about upfront is a funding requirement. Some companies, they need funding sources in order to start up, which you may need to start or grow a business. If it's a very compelling business, you may be likely, for example, to attract investors in a company and sell shares of the corporation. For example, if you're thinking of Airbnb, Airbnb is so successful that many investors are likely to onboard and invest capital in the venture. If you have such a business idea, but you don't have the funds to start up a company, you might think of a way for funding requirements. Another factor is the operations. This means a short description in the business plan of how the business will be run on a day-to-day business. This includes the staff, any process, and any procedure. And also, it's very important to review the operations every few months to check if the business is still run on the way you thought it would be. Perhaps you may need different stuff or a different process to run the operations successful of the business. And number 9 of the business plan, it could include, of course, any annex like any market research data or any resume of a management team member or any legal documents. You may want to include this to the business plan as well. It is important, however, to note that any business plan will vary depending on the business type you will start up and its specific goals. But the above named components are commonly included in any business plan, especially the funding requirements. If you are likely to set up a bigger global company, you may want to think of the funding requirements as well. If it's like a more small local entity, like a bakery, you don't really need to consider funding requirements. However, if you want to start with a small ice cream shop, like Ben & Jerry's, you might want to consider funding requirements along the way and still grow, because Ben & Jerry's, they also start as a very small company. Even Coca-Cola, they started very small. And I think even McDonald's, they started with just 2 co-founders, but along the way, you can see they reached a global, like, immense level. So it's very important to pay attention to all the different factors and check what is very important for the business type you're thinking of and the specific goals, and also the target audience, of course. So now I will explain a bit more about funding your business and the options you have, and then we have time for a conclusion and to ask any questions you may have as well. When you want to fund your business, there are several options available. One option, of course, is to go to the bank and ask if you can get a loan. This can be a good choice if you have a solid business plan, because if you don't have any solid business plan, the bank is, of course, not likely to give you a good credit score, because they want to make sure you're able to pay back the loan. However, keep in mind that you will need to pay back the loan with interest. So an interest rate will apply if you will go to the bank, and you need a very solid plan. Another option is that you could maybe apply for a grant. There are many organizations that offer grants to small businesses, particularly those who are in certain industries or geographic areas. And a grant doesn't need to be repaid, but they can be difficult to obtain. And they typically require a very detailed application process. The third option is investment from different investors, where you can pitch your idea to investors who are willing to provide capital in exchange for a share of ownership in a capital. This can be a great way to get the funding you need while also gaining valuable expertise, because usually an investor is somebody with more expertise than a new founder of a company. And an investor can also bring on board a lot of very important connections. So these are different options if you are thinking about attracting capital for your business. However, of course, if you want to set up a sole proprietorship, you may not need any funds for your company. And if you are thinking of onboarding investors, it is also very important to think of how many shares you want to sell to the investors. If you sell too many shares to an investor, that means your shares will go down. So it's important to think upfront, if you do want to bring investors on board, what is the maximum amount of shares you are willing to sell? What is the percentage you would like to keep to still have a certain percentage of ownership in the company? Also, you can bring on board investors in the beginning of the business phase, but also later when the company is bigger and it's more valuable. You can sell the shares, of course, for a higher price. So you can think of funding your business at different stages as well. So I think we now discussed the funds of the company and what you can do to attract different types of finances for the company. And in conclusion, a company, if you want to set up a company, it requires a careful consideration of, first of all, what you would like to do. I highly recommend to only set up a company if it's something you're very interested in, of course, and if there is a target audience available to be more successful on the long-term run. This means you have to do your own research, like who is your target audience, what is the appropriate business type for the type of company you would like to create. Also create a very comprehensive business plan. It doesn't need to be a whole book. A couple of pages would be enough, or maybe only 2 pages to start off with. You can also ask other people with more knowledge to provide feedback on the business plan if you want, and to secure funding. And it's also important to understand the benefits and drawbacks of each decision you make. I also recommend you to think of discussing your business type, the business structure you're thinking of, to discuss it with a lawyer and a tax advisor to check what is most beneficial in your case. And I encourage you to ask any questions you have right now, so I can hopefully answer your questions in order to start a new business.